With the earnings season around the corner and starting today almost with the IT sector, we were joined by Aditya Narain, who is the head of research of institutional equities at Edelweiss Securities, to get his views on, what can we expect in terms of earnings coming in from the March quarter, the low base effect obviously that we'll be seeing coming in for most earnings as well, and how is it going to aid the earnings, any further dent that we could see in the sentiment of consumers, what can we expect in terms of commentary, and which sector should we be watching out for in terms of earnings when we spoke to Aditya Narain. So here are some of the key takeaways that we should be talking about from the interview. So obviously, we don't know that the momentum is going to sustain even after adjusting the base effect, is what Edelweiss has already mentioned as well. Now, cyclicals like banks, metals are expected to see strong earnings. When we spoke to Aditya Narain, he did highlight that overall, yes, we are going to be seeing better earnings. This momentum is going to be continuing, but and revenue growth are also likely to be in high teens for most companies as well, on the base of a low effect. But what could be a concern is the management commentary could get a bit softer. We may not see an impact of the second wave of the COVID-19, is what he said, in March quarter, because it started mostly in April when we started seeing these restrictions coming in. So we wouldn't see much impact coming in the Q4, but what we could see an impact coming in will be in Q1, because that's when we are starting to see these restrictions as well as lockdowns. So that is what he highlighted as well as the management commentary, he said, will now get softer. While Q3 we were seeing a recovery, management was quite, the commentaries were quite bullish as well, cautiously bullish. So that is something very interesting, that management commentary now could get softer. They could become more cautious with the second wave coming in as well. Increase in raw material prices was already a headwind for most companies, so that is going to be something that we're going to be watching out for as well. In terms of sectors, he said manufacturing, industrials are likely to suffer, is what he's highlighted, while service sector, he said, service sector could maybe feel some pressure and some heat coming in over there. He said that they are expecting a massive margin expansion in terms of the YOY terms. Obviously, we do have the low base effect as well, but margins in March quarter will be weaker than that what we saw in December quarter. Yes, obviously, in December quarter, if you remember, Q3, that is Q3, gross margins were already under pressure for most companies, consumer companies especially, because the increase in raw material prices. Now, raw material prices have increased further, so maybe we could see some impact further coming in on gross margins as well. But he did highlight that margins in March quarter to be weaker than that in December quarter as well. And revenue growth expectations, according to him, are more modest than the profit estimates. So let's keep an eye out on all these points which Aditya Narain has highlighted, and we'll surely keep an eye out on what actually pans out in Q4 FY21.